Top 7 passive income investments for 2025. Passive income is no longer just a dream, it's becoming a necessity. As inflation rises and traditional 9-to-5 jobs become less secure, people around the world are looking for ways to make their money work for them instead of the other way around. In this video, we'll uncover the top 7 passive income investments for 2025, based on real trends, economic forecasts, and wealth-building strategies used by successful investors today. These are not get-rich-quick schemes. They are long-term, sustainable approaches that can steadily grow your income, even while you sleep. Let's explore what they are and why 2025 might be the best time to start. 1. Dividend-paying stocks. Dividend stocks remain one of the most stable and popular forms of passive income, and 2025 is proving to be an especially strong year for them. These are shares in companies that distribute a portion of their profits to shareholders, usually quarterly. What makes them powerful in 2025 is a shift in investor preference toward defensive and income-generating assets. With rising uncertainty and volatile interest rates, companies with a long history of consistent dividends, such as utilities, consumer staples, and healthcare firms, are being heavily favored by both retail and institutional investors. Dividend yields in the 3% to 6% range are becoming increasingly attractive, especially when reinvested through a dividend reinvestment plan, DREIP, which compounds your wealth over time. The key lies in choosing dividend aristocrats, companies that have increased their dividends for 25+ consecutive years. In addition to steady income, dividend stocks offer capital appreciation and lower volatility compared to growth stocks. Investors often hold them for decades, allowing time and reinvestment to multiply returns. Some brokerage platforms even automate dividend reinvestment, making the entire process hands-free. This strategy suits both conservative investors and long-term wealth builders alike. 2. Real estate investment trusts, REITs. REITs are companies that own or finance income-producing real estate. Instead of buying a rental property and dealing with tenants, you can buy shares in a REIT and earn a share of the rental income without the hassle. REITs are legally required to pay out 90% of their taxable income as dividends to shareholders. In 2025, REITs specializing in logistics warehouses, data centers, and healthcare facilities are performing particularly well, thanks to the continued growth of e-commerce, cloud computing, and aging populations. The best part? You can invest in REITs with as little as $100 through platforms like Fundrise or public stock exchanges, making this an incredibly accessible way to diversify your income. Unlike physical properties, REITs offer instant diversification, as each share gives exposure to dozens or even hundreds of assets. With options across commercial, residential, and industrial sectors, REITs can be tailored to your risk appetite. Liquidity is also higher. Shares can be bought or sold anytime, unlike traditional real estate. 3. Peer-to-peer lending platforms. Peer-to-peer lending, or P2P lending, involves lending your money to individuals or businesses through online platforms that handle credit analysis, risk, and repayments. You earn passive income through monthly interest payments, which are often higher than traditional savings or CDs. In 2025, more regulated platforms and better risk algorithms have improved the safety of this investment class. Lenders can now choose risk levels, low, medium, or high, and spread their investments across hundreds of loans to mitigate defaults. Annual returns typically range from 5% to 10%, and while there's always some risk, platforms like Lending Club and Prosper are refining their models to attract more conservative investors. Many platforms now feature auto-investing, where funds are automatically distributed based on your preferences. Some even offer buyback guarantees and insurance-backed loans to further reduce risk. This creates a reliable income stream while letting you retain full control over where and how your capital is deployed. 4. High-yield savings and money market accounts. Though not often considered an investment, high-yield savings and money market accounts are a vital part of a passive income portfolio, especially in an environment of elevated interest rates. With central banks globally adjusting monetary policy to combat inflation, banks are now offering interest rates between 4% and 5% annually, sometimes higher for online-only banks. While the growth is modest, the liquidity, stability, and zero risk of loss make them ideal for emergency funds or short-term goals. In 2025, fintech banks are leading this trend by offering competitive rates with zero fees, automatic savings features, and even cashback integrations, all helping your money earn passively in the background. Many of these accounts are FDIC or government insured, meaning your funds are protected up to certain limits. Additionally, some platforms allow you to link multiple income streams and funnel them directly into these accounts, turning them into central hubs for earning passive interest automatically. 5. ETFs with monthly payouts. Exchange-traded funds, ETFs, are baskets of stocks, bonds, or assets bundled into a single investment. While many ETFs focus on growth, an increasing number are now offering monthly dividend payouts, making them perfect for passive income seekers. Some ETFs specialize in high-yield bonds, real estate, or dividend-paying companies across different sectors or regions. These monthly payouts mimic a paycheck-like income stream while still allowing for capital appreciation over time. In 2025, ETFs with international exposure are gaining traction, particularly those focused on emerging markets, where yields and growth potential are both high. Look for low-fee, diversified funds from reputable issuers, those with consistent yield histories and large asset bases. What makes them more appealing is their built-in diversification and liquidity, which lowers overall portfolio risk. Many brokers offer fractional ETF shares now, allowing you to start with minimal capital. And since ETFs are passively managed, their fees are often significantly lower than mutual funds or active portfolios. 6. Digital products and royalties. As the creator economy grows, so does the opportunity to earn passive income from digital products, such as ebooks, templates, audio libraries, coding scripts, or online courses. Once created, these products can be sold repeatedly with little to no extra effort. In 2025, AI-assisted tools have made creating digital content easier than ever. Platforms like Gumroad, Teachable, and Shopify allow creators to upload, list, and monetize content globally. You don't even need a massive audience. With good SEO, paid ads, and automated funnels, a digital product can generate thousands in monthly passive revenue. Royalties from music, design, or even photos through platforms like Shutterstock are another underutilized stream. Once uploaded and licensed, they can earn you income for years without any additional work. The best part is the scalability. You build the product once, but sales can continue indefinitely. Many entrepreneurs now pair digital products with email marketing and affiliate tools, creating self-sustaining ecosystems that run 24/7. It's an income stream powered entirely by automation. 7. Automated crypto staking and DeFi yield farming. Cryptocurrency may still seem risky, but 2025 is seeing a shift toward regulated, automated crypto income platforms. Staking is the process of locking your crypto to support blockchain operations and earning rewards in return. Major coins like Ethereum, Solana, and Cardano offer staking yields between 4% to 8% annually. And unlike trading, staking doesn't require active monitoring. You deposit your crypto, choose a validator or pool, and earn regular interest. More advanced users also explore DeFi yield farming, where tokens are deposited into liquidity pools to earn fees and rewards. While riskier, the passive gains can be significant when combined with stablecoins and automated protection features. In 2025, staking platforms now include risk scoring, auto compounding, and cold wallet compatibility, making it safer for everyday users. With minimal effort, your idle crypto can generate returns, turning a volatile asset into a source of predictable income. As adoption rises, even traditional investors are starting to diversify into staking. Passive income in 2025 isn't limited to the ultra-wealthy. With the right strategies, tools, and platforms, anyone, from students to retirees, can begin building streams of income that grow over time. Whether it's through dividend stocks, REITs, P2P lending, or crypto staking, the goal is the same: to put your money to work so you don't have to. And remember, diversification is key. Don't rely on one source. Blend stable, low-risk investments with higher-yielding options to balance safety and growth. If you learned something valuable in this video, Don't forget to like, comment, and subscribe for more content just like this. Because your journey to financial freedom deserves the smartest roadmap.